many corporates and owners of the businesses are not comfortable their financials being on mobile and their payments being on the mobile. So we'll hear from our very, very interesting panelist on opportunities in next generation transaction banking. Can we have the... Yep. Yep. So we'll start with Bassam. Bassam, very, very warm welcome. Bassam is the head of transaction banking at Boubyan Bank. Bassam comes with 20 plus years of experience in transaction banking, not only in Kuwait. He's been in Kuwait for the last few years, but prior to that, to multiple markets, including Saudi Arabia, Lebanon, and multiple other geographies. He's also had an earlier stint at Gulf Bank in the region. So again, he understands the region very well. And it'll be very interesting to hear from you, your perspective on how global transaction banking is shaping up in Kuwait. My next panelist is an intermediary and a facilitator, which all of you use, a person from SWIFT. Sam, please come over. He's head of the international payments for SWIFT. And of course, he will tell us more about how things are changing at SWIFT and how do they listen to customers and change, right? Because we've seen a huge amount of change happening on the payments, and all of us are preparing next year for ISO change as well. Last but not the least is the lady who is a thought leader in transaction banking, and I personally learned a lot of my lessons from Deepa. So Deepa, a very warm welcome. Deepa Santanam. She is Senior Vice President and Digital Transaction Banking at Intellect. For those of you who do not know, Intellect is a company which grew from a small product-based fintech to a market leader in comes to transaction banking space. They started it all with City Direct many years back, and now you see the significant amount of innovations. So again, a warm welcome. Just a quick start to transaction banking, because many of you may not know what is a transaction banking. So I'll request Bassam to just educate us a little more, because many of you are retail bankers, many of you are from banking and certain other communities. So Bassam, if you can just tell us, because a lot of people misunderstand when you say transaction banking, and how does a corporate and wholesale, how important is it for corporate and wholesale?
All right. Thank you for having me, first of all. And transaction banking is pretty much an evolving business. So I'm gonna go back a little bit in timeline. So I'll tell you how the business evolved a little bit. So if you go back, let's say, to my early days with HSBC to 2004, the business was called EBD, electronic banking. This was even prior to the days of connecting online to the internet and doing a financial transaction. So we used to be called electronic banking. We used to call on our client, offer dial-up modems. For people who remember dial-up modems, means you're old enough. So we used to offer dial-up modems to our large corporate and institutional clients to grab their data, their payments data, and move it to the banks. So 2004, per se, HSBC with a large corporate client in Beirut American University, we didn't even call it digital transformation. They just had large number of payments, and they were changing their accounting system. They were looking for a type of an ERP implementation. It wasn't called digital transformation back then. And what can we do? We have 5,000 payments monthly. So we had something called Hexagon, or a dial-up capability to the bank. We tried with Dubai. What can we do with those people? Oh, we don't know. Let's try global electronic banking in London. So we set up with London to support what we call now a basic host-to-host capability. So 5 years down the road, going to Saudi Arabia, we had a large client called Aramco, who had 18,000 gas stations that needed to reconcile incoming payments immediately and in real time. We used an IBAN format. We manipulated the zeros, to which something now in 2024, we call it virtual IBANs. So this is this is, I mean, at the root of it, in terms of education, we just look into following the money, into the collection and the payments and the digitization of things. But this business isn't new. It's just shifting the names from electronic banking to payments and cash management to transaction banking, and obviously encompassing as well trade, supply chain finance, so on and so forth. But having these two examples of host-to-host and virtual accounts, but in 2024. So now ERPs have come really more affordable to the smaller type of clients. Now digital transformation is kicking in full force. $2 trillion spent in 2020 by corporates transforming their operation, transforming their treasuries. So this is demand of digitization that bank now has to cater for. What these two use cases now can translate, so now we have host-to-host capabilities as plug and play for our corporate clients, not necessarily large corporates. Any small or medium enterprise that has type of ERP or an accounting system, we can plug in. You sign today, you start tomorrow type of capabilities. So something that used to take us 3 to 6 months to implement with the large corporates in 2024 now is a plug and play in 2024. Those, what we used to call manipulating the zeros in an IBAN, and now we call them virtual accounts, are also now ready-made APIs for our clients to consume in a type of service that we now are calling banking as a service. So there was a reference in, I think, in your presentation, Chitan, that about types of going forward. Previously, we used to say, if you can't join them, if you can't fight them, just join them. When it comes to fintechs, now we're more and more seeing no actual opportunities being opened for the bank to work with those fintechs. And there are some forgotten terminologies like financial inclusions, like in places like Kuwait, where we still have a large unbankable population, those virtual accounts come in not simply to reconcile incoming payments for the likes of Aramco 10 years ago, but also to address other places in the market where we can generate business. And there's a lot of business to be made. So when we were talking about payments and monetizing payment not necessarily means taking a fee on a payment. It's just generating a revenue from a payment, be it by collecting deposits, by generating actual fees. So this is where we are in 2024. A long way from the early 2000s giving up a dial-up modem as a promotional item to fully integrating with our clients' operations. When we visit a client, we don't ask him just about his financial needs. We ask him, how does he operate? What technology does he use? How can we integrate? How can we do? What can we offer you to make your banking experience? I mean, worry about your business. Don't worry about the banking. Let us worry about the banking. So this is, in a nutshell, what we're doing in 2024. And bringing this to Kuwait specific, Kuwait has seen, lastly, a surge in requirements for transaction banking. For a change, transaction banking isn't a nice-to-have type of capabilities. It's a must-have within every bank to lead the wholesale bank franchise. It's moving away from your standard asset liability game to providing payment and technology-based solution. I'm going to speak on behalf of Boubyan. Boubyan has, on its imperative strategic initiatives, transaction banking is number one. Boubyan, for the last 1.5, I joined Boubyan less than 2 years ago, and we're building capabilities across the board, from human capital to technology to internal processes. So we drive this strategically because this is where the wholesale bank is headed to.
Fantastic. I think the story clearly says that there is a business to be made out of the technology, and right from Boubyan and transaction banks are doing that. So this is a very, very interesting play. Now, Sam, when you look at it from Swift perspective, right? Mm-hmm. And Swift is a global giant in payments. How does the next generation of transaction banking create more opportunities for frictionless payments? And how is Swift changing to support the banking partners?
Thank you, Chitan, for that question. So let me start from Swift's strategy on that. So Swift's strategy is to enable instant and frictionless transactions, account to account, anywhere in the world. Not only for low-value payments, also for high-value payments. And the strategy is not Swift's own strategy just because Swift is not a private-owned company. Swift is a network-owned cooperative. So the network members, who are mainly banks and some other financial institutions that are more than 11,000, they are owning SWIFT. And we are all together as a community driving those strategies and getting those strategies together. So it is a strategy of financial, let's say, community. And when we talk about this strategy, there are also two main motivations behind of that strategy to make cross-border payments instant and frictionless. First, customer expectations and user expectations. Not only for low-value payment, yes, it is mainly driven by low-value payments by the retail and SME segment customers of the banks, but also with the corporates and others, because they want less friction, they want transactions to happen in a more frequent way. They see there is competition, fintechs are in the game now, and in order not to, let's say, lose any business opportunity, this is one thing. So customers now more instant and frictionless transactions on cross-border payments as well as on domestic payments. So this is one motivation. The other motivation is some of the organizations put this strategy or this motivation as a homework in front of the financial community. The biggest one is G20. So in 2020, in Saudi Arabia, G20 countries came together, and Financial Stability Board among G20 countries, they decided to put some, let's say, aggressive or ambitious targets for the countries, not only for G20, but the entire world, on cross-border payments. So what are they? There are four main pillars. So first one is speed. So G20 countries, they agreed that until 2027, 100% of cross-border payments should happen in less than 1 day. And 75% of them should happen in less than 1 hour. So this is very, very ambitious target. And this is why, as SWIFT, we are also shaping our product capabilities among this target. And the second pillar is transparency. So the target of Financial Stability Board is to enable cross-border payments to become transparent in terms of fees, in terms of cost, in terms of tracking capabilities, so that if you make a cross-border payment, you should be able to track the payment. So you should be tracking it as you order something from Amazon and you track it from a metro line. So you need to do that as well. This is why, for instance, since 2016, we have GPI, and that GPI is now a norm for entire community. More than 80% of the SWIFT network transactions are on GPI rails. That means transparent and traceable. And the third layer is cost. So this is out of SWIFT scope, because as SWIFT, we are not involving in the commercial decision-making processes of the banks. But that is also an aggressive target, which says, on average, a cost for a cross-border payment should not exceed 1% of the transaction amount. So this is the target that G20 countries put. And the fourth one is accessibility. Since we are talking digital payments, the target is for every financial institution to offer cross-border payment option from a digital solution that they have. It can either be internet solution, mobile solution, but everything that is outside of a branch, you can think about APIs, host nodes, connections, etc. So these are all counted as digital, so that by 2027, these strategies are set and these targets are set. And as SWIFT, we are now offering solutions like GPI, pre-validation, case resolution to enable the cross-border payments to happen instant and frictionless. More important, we are also changing the infrastructure. So the standards are changing. By November 2025, in order to back all these strategies, we are now moving to ISO standard, in order to talk the same language altogether with the most of the domestic market infrastructures and cross-border together. And it will enable to have richer data on the cross-border payments that will enable less frictions for the transactions as well. And the deadline is November 2025, and this is the challenge. Maybe we can discuss it in the next part of the panel. But every single financial institution on SWIFT network should be a native ISO compliant user that should be taken to place by November 2025.
Excellent. So even Swift, which is one of the oldest network, is changing with a huge amount of transformation, as Sam informed us. Now, Deepa, when you look at these transaction banking transformations from legacy H2H to new generation platforms to custom solutions across trade finance and multiple other areas of real-time payments, liquidity, how do you see this changing from a supplier's perspective and providing new solutions to the banks?
Yeah, thanks, Jason. Basically, I think what he talked about payments, of course, the payments infrastructure is changing. Historically, we have seen payments have always been delayed. Transparency, the view, visibility of where the payment is lying for the corporates, for the SMEs has always been very difficult for them to track. So with real-time payments, I think that has brought in quite a lot of change in the financial landscape. It's a ripple effect, like the operational costs have improved. There's a lot of transparency or visibility, like Swift GPI tracker we talked about. There is so much transparency, and the funds are immediate in the corporate or the SME account, right? That's what we talk in the earlier panels. We also talked about customer centricity. So what is all about customer centricity? It's the experience, the payment coming in immediately for a customer makes with real-time payment is far more effective for them. Similarly, the transparency, the visibility. So real-time payments, of course, also globally as we talk about, nearly it's going to increase by 67 to 70%. The increase in payments is really going to rise in the next few years by 2027. So they are here to stay. Very, very important for all corporates and SMEs. Obviously, payment is payment, and it's going to remain forever in our lives. When we talk about trade finance, again, legacy trade has been very high, and while most banks have tried to digitalize trade to a large extent, it's just been more of being able to take in digital self-service for trade. But there's a lot beyond that. The legacy trade has had very huge manual processes. Operational processes have been very, very difficult for trade finance. There's whole lot of documents that go in and come out. And that's where in the next-gen transaction banking, as we are looking at, AI, machine learning, doc to API, converting your documents to API, having very less manual processes and operational overheads is something that is very, very important, especially on the trade finance front. So when we'll talk about AI and ML, I think trade is one of the key areas where documents which have been very, very heavy and the operational processes which have been very heavy. In fact, it's a very strong use case on AI and machine learning, if you look at it, for trade automation. So that's on the trade side. And when we talk about liquidity, especially corporate liquidity, again, for many years, and especially in the GCC, while advanced markets have been growing liquidity, we're talking corporate liquidity, which is sweeping and notional pooling. That's what we've been talking in the last few years. But if we look at liquidity now and large corporates, again, the real-time visibility, the cash flow forecasting that they want to do, to be able to maintain their working capital cycles more effectively, to maintain their liquidity more effectively. So bringing in a lot of multi-bank cash concentrations. We talk about interoperability with banks, getting open banking in so that the visibility of funds for corporates are always dealing with multiple banks. So for them to be able to see their view of their cash positions across banks, and being able to, for a large corporate, being able to, do his intercompany lending by lending his own entities and not depending on the bank. So all of these in liquidity, especially when we talk about next-gen transaction banking, that's something that's really coming up. So technology, a lot of technology is in play for transaction banking here to grow.
So this would be a lot, Deepa, for you to educate, right? Because you will see matured markets,
Yes.
Markets which have not yet really very matured payment infrastructure, to markets which are real-time payments.
Right.
So how does Intellect and you pass this education to your customers and bankers?
Yeah, like I said, there are the growth markets and there are the advanced markets. So the advanced markets, which is obviously the UK, Europe, they've all evolved pretty much in, especially in the liquidity management area or open banking for that matter. So all these global enhancements that we get into the product is something that we try to bring into the GCC and these markets. In fact, in the last few years, we've seen quite a lot of uptake that GCC markets have actually taken on improving real-time payments. We've also looked at Central Bank of, let's say, Kuwait or Central Bank of UAE actually coming up with these e-dirham in UAE, which is also CBDCs, which is the digital currency, is also something most of these GCC countries are coming up with, which probably other markets have already taken up. So we, as Intellect, we try to get in, because we are more of a product company, when we try to talk to our customers also, we bring in those global expertise from different markets and provide it to these markets and to the customers. So the banks are able to actually go and give niche products or improved products to their own customers. So when we talk about intercompany lending, it's something that traditional JPMC has been doing it for 15 years now. Whereas, in UAE market, we've just had those large banks coming up with intercompany lending within the corporate hierarchy itself. So, and other, Kuwait and other banks here are trying to catch up on that. So definitely it's a lot of data assimilation that comes in, and then the trends as well as the global expertise that we bring in is something that we actually take to the markets.
Very interesting. So areas like traditional trade, settlements, liquidity, you're taking to the next generation of use cases, yeah? Sam, so coming to you on B2B payments, now with so much focus going away from checks and payment volumes going through the roof, how do you see B2B payments changing from a SWIFT perspective? And do you have an advice for banks? What should they do to try and help corporate do the smooth migration away from checks into the payments?
So when we think about the payments, and especially on the international payments, we don't see that much competition on the service providers for high value payments. So when you think about mostly B2B payments, when you look at low value payments, yes, there are fintechs, there are other big tech companies now into the game. Banks are offering their own solutions. Everyone is looking after the most effective way to do that. But when you look at B2B payments, it is mostly on SWIFT rails because the funding is through correspondent banking, and correspondent banking means you need to use the most common network, which is SWIFT. And when you look at the SWIFT network, what we see on B2B payments is that, so in order to make it more digital, in order to make it more efficient for the corporates tend to, so these are mostly multi-bank entities. So they don't want to go not even to the branch, to the mobile or internet banking of bank A, then bank B, then bank C to do a payment from each and every bank. So what they do is they use their TMSs or treasury management systems or ERPs that they have. They do account aggregation from one point of connection. They would like to manage their liquidities, cash flows, etc. So coming into payments, what they usually do is many of them try to use a single connection with every single bank that they have, which also is SWIFT, because we have around 2,000 corporates who are also on SWIFT. I can name a couple from the region, for instance, Aramco, for instance, Turkish Airlines. So these are all entities that are also on the SWIFT network. So by having a connection with their banks through SWIFT network, they also send their payment instructions to every single bank that they work with without going to a single channel of those every single entity to make a payment. And on top, they are using some bulk payment capabilities as well. So they now upload files. That files distribute those payments to the numerous of banks that they have accounts. And they, with one single implementation with SWIFT and one single file uploading, they can do payments from multiple banks. And as well as it is also the same when they collect the account information back. With the MT940s, they collect the information from the banks to their end in order to seek and manage their cash flows. And lastly, when we talk about transparency, it is also very important for B2B payments because it's not a low-value payment. Speed is, let's say, less important than the security of the payment for high-value payments. So the traceability and tracking capabilities is more important. And when we look at B2B payments and high-value payments, when we look at what corporates need, they need to track a payment from their ERPs and treasury management systems as well. And not only for outgoing payments. So they would like to see, okay, I would like to have a visibility on the incoming payments so that I can manage my cash flows, short-term cash flows, and I would like to see when and how much that money is going to come to my accounts. So this was a demand, and as Swift, we started offering G4C, so GPI for corporates. This enables corporates to track their payments, both the outbound, so outgoing ones, as well as the inbound ones. So then those corporates that I named, for instance, they are able to track their incoming payments so they can foresee a day or 2 days of cash flows that they will have in the short term.
Interesting. So clearly B2B payment is also changing. So Bassam, with the concepts which we spoke in the technology in the morning around machine learning, AI, and some of these new innovations, what do you see? How does this can be packaged and offered to your corporate customers as custom solutions? Because they have not experienced this technology. They don't know. They all know the buzzword, but they don't know how to implement within their interaction to the banking system.
Like you said, behind the buzzwords and the flashy statements, we want to see a use case that works for us. I think somebody from the previous panel said the same. And luckily, and it's with a small disclaimer, for the corporate space, for the corporate banking side, the impact comes in slower. Right. So when Sam was talking now about B2B payments, he's talking about MT940s and MT101s, and this is kind of an open banking that is 20 years old. So now when we're talking about open banking in the wholesale bank has been here for 20 plus years, but we didn't call it open banking. We just call it multi-bank reporting, Swift for corporates, whatever it is. So the impact on those technologies that are coming in specifically now has, be it open banking, be it AI, be it any other aspects, is now impacting more so immediately the consumer side of the bank price. So it gives us a little bit of time to, take a deep breath, see some use cases, and implement accordingly. Where we're seeing us for a bank, first of all, where we can apply this is, or where we'd love to apply it is, and we have so many pain areas and friction areas that we'd love to see fixed, but where we think we're going to venture first is somewhere where kind of a customer relationship management for our corporate clients, where AI can collate a large data from numerous sources of data. If I'm talking corporate, I want to see my Chamber of Commerce data connected to my official gazette whenever there's a project being kicked in, from my bank data or my customer transaction data with my client's balance sheets, and come up with the perfect timing to visit my client if he is landed a project, be it in Kuwait or in Saudi Arabia or somewhere. Something that historically takes me a lot of time to collate, and it's depending on the actual individual being extremely well trained, fetching data, collating it, coming up with proposals to know when to actually go to the client. So AI could play us a very crucial role in cost of acquisition here for the business. Collating this data, coming up with proposal, the right question, the right leads to go to the client, all the way to the kind of a contract life cycle with the clients, right? So when we go to our clients and we have a credit proposal, from credit committee to actually generating the documentation needed, all these are time consuming. And we see, I think that this is a good place for us as a bank to start with. In terms of corporate client, there are a lot of players in the market. Swift for Corporate is one of them. The fintechs are one of them. Treasury management system is one of them. So we're seeing some good use cases with them, and we sometimes try to, we don't have to reinvent the wheel. Sometimes we can mimic few things, but offer it to a large client base. One good example is, Deepa was talking about liquidity. Treasury management systems more so are now embedding chatbots into their treasury management systems. But those type of treasury management systems, they can only target the very large corporate ones. When we as a bank have a larger audience, we can do that. So maybe when I collate this, with open banking even coming in, not necessarily through SWIFT, I can be to a large number of clients consolidating their bank balances, doing some small liquidity tools for them, and offering some chatbots that will help the accuracy of their cash projections. Because cash projections are being done on ERPs and TMS, but the big question is, how accurate is this? And I think, without quoting anybody, but one of the largest treasury management systems, they saw a large increase in the precision of their cash forecasting based on AI capabilities and stuff like that. Imagine the bank, you can ask your bank, how much money did I receive from this vendor last month? And you don't have to go back to us, right? This comes up immediately. So while you're talking on the phone, you're getting your information handed over to your client so he can address his clients accordingly. These type of the use cases that we would, taking them baby steps as a bank, as a transaction bank, because the consumer bank has a completely different agenda and a completely different pace with that.
Very, very interesting, Bassam. So while all these technologies getting built and suddenly corporates are using edge-to-edge and other platforms to deal with the banks, the security must be becoming a very big thing. So as a supplier, how do you ensure, because these are high-value payments, not a B2C, how do you secure these differently compared to a traditional, just a password security which used to be there?
Yeah, see, I think cyber frauds are the most scary thing that we actually see. I'm just talking about dreams of customer. When you're sleeping and you hear 4 pings on your phone, you really worry about whether there is a credit card hack that's happened on my phone, and you wake up from your dream, right? So that's one thing. Just imagine, I'm talking retail, just exponentially look at it for corporates. That's something very, very important with the volume and the value of transactions that go through. So we talked about host to host. Host to host has its own security. You have encryption, you have decryption, you go through file security mechanisms. You have two-factor authentications for transaction banking. Obviously, nothing goes without two-factor. In fact, Kuwait has multi-factor authentication. It doesn't depend only on two-factor authentications. There is a whole lot around cybersecurity, especially when we talk about processes, ensure that the robust processes are there in place so that any transaction, there's a workflow of a transaction, any transaction that really happens goes through the right encryption, right transport protocols, and so on. So those basic security for corporates is much higher than what we do for retail, of course. And when we talk about bulk files, bulk transactions that come in, there is a lot more validations and authenticity of the data coming in, who entitlements, who authorizes such transactions. So all these things actually come into picture from a security perspective. When you look at cyber security, again, there is a whole lot of training, awareness, from entitlements of what you're offering to the customers. Everything has to really come into the right frame for the corporates especially. So when you look at security, I would look at it like 2 or 3 fold. One is robust processes. Second is all about technology. Advanced technology has now come in. We talk about AI and ML to help even getting all these threats that come across. You have preventive mechanism with the machine learning. It has looked at a lot of data which manually we cannot look. The human in the loop cannot really look at this kind of data. So use AI and ML for looking at normal threats that come out, any frauds, any kind of payment validations that need to run through. And you also have now LLMs. The focus of LLMs they analyze patterns and anti-patterns much better than a human mind could do. So these are all the areas from a security perspective, while we've all come through with multi-factor authentication, protocol, encryption, and so on. I think AI and ML will really take it to the next level with automation and the security being multifold as compared to at least the humans don't really need to look at a lot of that.
So it's not only the technology, it's a process and the culture also, which makes a big difference in security. Very interesting. Sem, just concluding last question for you. Now, given the opportunity and challenges you see on cross-border payments, you see the amount of interconnected world Bassam spoke about earlier. So with this level of change, what do you think the banks, which are your primary members, what do they need to do differently to ensure that they benefit in this whole corporate world?
Okay, so talking about challenges and opportunities, I would say ISO 20022 is both a challenge and an opportunity for the banks. It's a challenge until November 2025 because it's a huge change on your systems, on your back offices, etc., etc. So there is a, let's say, development need. And if a bank has not started as of today, it is about to be too late. So, but we know that banks have already started the implementation of ISO, etc. And by November 2025, if that bank is not ready, they won't be able to make a cross-border payment on SWIFT network. This is the challenge. But it is going to be solved, and everyone, we are about to be sure that going to go live by November 2025. And after that, it is an opportunity. Why? Because we see that from the banks who are live as of today, because now we are in a coexisting period since November 2023, banks could decrease their false positive ratios by 30% just using ISO. Because now they have more concrete data, they have rich data, so that it will cause less friction on the payments, less need for exception and investigation processes, and rich data will increase the efficiency on the payments. So this is one, let's say, challenge and opportunity that I can mention. Another challenge is fragmentation on the payments. First thing is that this is not for high-value payments as of today, but on low-value payments we see more and more because there are more players in the game. It was not only SWIFT. Now banks are using their own bilateral APIs. There are big technology companies now working on cross-border payments areas such as MasterCard, Visa. There are aggregators such as Tunes, TerraPay. There are fintechs for low-value payments, Wise, Ripple is still there, etc. So you see it's a fragmented world. So it is very clear that there's a need for interoperability because no one can use each, let's say, network. So banks will choose their game to invest on one another. But there should be a, let's say, glue that will enable every single, let's say, network to talk to each other. And we believe that can be SWIFT. So we are the network optionality for the financial industry. And now you may even heard about the partnerships with Wise and SWIFT, with Visa B2B Connect and SWIFT. So these are all going to happen more and more in the following days. And the latest, maybe I would say, not last but not least, CBDCs. So CBDCs are going to take place, that's for sure. So central banks are investing heavily. There are more than 80 countries, central bank, that are now on the implementation stage. 11 of them are live as of today on CBDCs. But each central bank uses its own technology infrastructure. So again, these are all going to be the digital islands. So someone should also interconnect those digital islands because someone in near future can have a digital currency account in a bank that needs to make a payment to a fiat currency account in another bank in another country. So there should be interoperability, there should be interlinkage. So that should be the conversion. And ISO is capable to do that. We tried, we see it is working smoothly. So in near future, it's also an opportunity for the financial industry to make cross-border payments from a digital account to a fiat currency account or vice versa.
So very, very interesting thoughts from the panel. First, around Bassam on innovation and how corporate transactions are changing and how bank can offer inclusive solutions. Clear message from Swift. They are modernizing and they are going to create a very, very interconnected world with interoperable. And Deepa talking to us about how solution providers can help you digitize and automate your corporate and wholesale experiences. Right, big thank you to all of you. Any questions from anyone in the audience? Go ahead, Ram.
James, this question is to you. Going back to the ISO 20022 and the regulations. There are two parts to what you were explaining, right? One is about the data enrichment and the benefit that in itself entails. And the second, obviously, is the fact that you're actually having this to be interoperable and we're trying to create something that is uniform. If you foresee this down the line, I mean, if I extend that not 2025, but let's say 2028, what is in store thereafter? I mean, after 2025, what should one expect to actually happen?
Okay, so we're looking match by match, I should say, at first. So the biggest challenge is now 2025, but we see it is growing. As of today, around 25% of the payments on SWIFT network are already on ISO. So it is going to enlarge more and more. So the first part is 1, 2, and 9 messages, which mean payment messages and the cash management messages statements. And then we are looking after corporate payments, so that MT101s, etc., that corporates are working with SWIFT and with their banks are also going to be ISO native in near future after 2025, so that we will see entire connection to be on ISO in vision.
Excellent. Any other questions? Go ahead, Nikhil.
So this question is for Bassam, you. In the morning we spoke about persona-based transaction banking. So targeting your transaction banking solutions for a CFO and what their requirements are. So how are you doing this in your bank, and what's your experience with it?
Well, CFOs more and more are expecting what they get on their consumer interaction with the bank. And that's a bit of a challenge, despite the services being different, the offering is different, but they're expecting a UI, UX that is embedded and easy for them to use. So they're more and more a mobile application for the corporate space that allows them to navigate, authorize, do whatever they can, and to personalize is now the norm, right? So if they have a wonderful UI, UX from Boubyan on their personal account, they expect the same on the corporate account, despite the heavier complexity of the offering. So if a CFO is authorizing 100 payments, you need to develop an intuitive tool for them to be able to approve on the go with all the complexity needed. So basic stuff in that sense, but this is where it's personalizing commercial banking in that sense. I think I just stole your motto, Deepa. I think you consumerizing, right? I think I saw this with you guys.
Consumerization of corporate banking.
Consumerization of corporate banking. I think I'm using their own words on that sense. So we're really focusing on UI, UX now on corporate bank. It's not purely functional anymore. Corporate banking offering is not purely functional. It's also intuitive to their operations, integrated to their ERPs, to their TMS, stuff like that. We're more and more, as far as we tie up with payment providers or payment aggregators in town, it's more trying to generate leads from all this data flowing and feeding those CFOs of potential opportunities that we can do as well. So it's really integrating with their operations, really touching on their intuitive interaction with the banks as well. And I'm sorry for using your more over
I'll
there.
just add to that because he just mentioned it. It's all about hyper-personalization. It's the persona of every. We are not talking just a retail user. It's just me using it. It's in a corporate environment. You have the HR, you have the maker, the initiator, somebody doing the payroll, somebody else doing often a CFO role, somebody else is a CEO or a CXO role. So based on the roles and the profile and the persona of the user, which is what Bassam was trying to say, that's the kind of information that you would put through. So it becomes all about personalization, customer experience that Farida talked about, and the entire personalization experience for the corporate user based on his persona. So that's also translating into the AI space where you do hyper-personalization based on persona of the user. So that's why he talked about relationship manager, an ops user, a corporate user. It is very different on what kind of chatbot or virtual assistant or a co-pilot that you would require for these customers.
Excellent. Yeah. Thank you so much. And that's it from us. Hope you enjoyed the session.